what a president promises before an election, what actually happens, the extent of everything tends to be a far more watered down version than what they initially promise.
Welcome to 360 Money Matters, where financial planners Billy and Andrew talk all things financial planning. This podcast aims to increase your knowledge and confidence with all things money. Each week, they will cover topics like wealth creation strategies, investment principles, creating passive income, paying off your debt faster, and much, much more, so you can live a life on your terms without limits.
Hello and welcome back to another episode of the 360 Money Matters podcast. I'm Billy and I'm joined by my co-host.
Andrew. Bills, here we are. Post-US election. Had to get that one in.
Market wrap, Andrew. Market wrap, post-US election. A lot to talk about. Everybody's pretty excited from a financial markets perspective because we're recording this a couple of days after the election and markets have gone or responded really, really well. So there's a little bit of meat on the bone to cover here. Andrew, let's kick it off. Where do we start?
Yeah.
Got to start in the US, right?
Got to start in the US. That's been dominating the headlines regardless of where you've been living around the world. So US stock market is up, and the US stock market is up substantially, so 4.09% in the last month. Now, that's off the back of a fairly similar result in the previous month as well. So we're talking about, S&P 500 is absolutely going berserk at the moment.
Yeah, and look, I mean, obviously that's...
And we're hitting all-time highs
all-time highs. We've just had the election result. Like I said, the markets have responded positively to that. So this is kind of like another nudge for the market. So pushing, obviously all-time highs. From an economic data perspective, the economy is still on track for a soft landing, which is exactly what the policymakers and the government want. The market is still looking at a 25 basis point cut when the Fed meets this week as well too. And the labour market is slowing and is still resilient though, which is interesting.
Yeah, so all signs at the moment are fairly positive indicators from a market perspective in the US. I think the big thing that people are yet to see how it's going to play out and where some of the concern in the market is following a Trump victory. A few of the policies that Trump is talking about is inflationary in nature. So we're talking about things like, lower illegal immigration. You're talking about tariffs, particularly tariffs on China. You're talking about bringing manufacturing back onshore and incentives for the US market to bring manufacturing onshore, which are all things that are higher in nature with regards to inflation. So there may be some slowdown in the rate cuts in the US to try and combat some potential inflation. But look, as with everything, and we were talking about it a little bit before this, what a president promises before an election, what actually happens, the extent of everything tends to be a far more watered down version than what they initially promise.
It's a really interesting way of putting it. I was just going to say, I didn't even know the guy had any stance on any policies whatsoever, right? But look, on that note, job openings decreased by 418,000 as well too, keeping in mind the size of the market. So 418,000 swing
very insignificant.
Is really small, keeping in mind how big the market, the economy is over there. So just keep that in mind when we are talking through that because it is such a big economy. Consumer confidence rose for the month of October, 9.5 points to 108.7, which is the largest 1 month increase since March 2021. So, consumer confidence drives so many different things. To be able to see such a big increase, and like we stated, since March 2021, that is absolutely huge. And the people are pretty euphoric in terms of what the outlook looks like for them as well too. You go and add and that was for October, you go and add the fact in that they're changing presidents and obviously the majority of the country voted for him.
Yep.
So, it's looking good in the United States.
Yeah. I mean, look, that's the biggest rise since, March of 2021. So we're talking consumer confidence starting to come back into the market, which again is another thing that causes inflation. And ordinarily speaking, when we're talking about these metrics, it's very positive. But I think that we've all been very inflation sensitive over the last few years and have really been looking at that as a measure of success of an economy is inflation coming down, when normally it's inflation increasing or staying within the band. So it's all positive signs, but it's provided that you can keep it contained and the cost of living doesn't go out of control.
Yep. A much more comfortable living in Australia and taking our lead from the United States, because when we pivot into what's happening in Europe, that's a completely different conversation, a completely different outlook. Andrew, what is happening in Europe? What are we seeing?
Yeah, so generally in Europe, we're talking about European Central Bank. There's been some debate and there's been some chatter about them reducing interest rates below neutral in order to be able to stimulate their economy. So there's some concerns in European market that it's completely swung the other way. So we're not talking about inflation, we're talking about deflation, and we're talking about needing to drop interest rates in order to be able to stimulate an economy. So European market is on the opposite end of the spectrum, which is a concern.
Yeah, it's, tale of two continents, I guess, right? So, yeah, interesting. Look, let's pivot across into China as well too. So recently the vice finance minister, they were talking about their stimulus is focusing on lifting domestic demand, which is not surprising, in order to try and reach the growth target for 2024 that they had set for themselves. So it's good that they're constantly saying that and concentrating on that, because still, at the moment, you mentioned Trump talking about bringing manufacturing back on shore, but China is still the factory for the world. So it's good to see that they're targeting that, and then they'll coordinate that with monetary policy in order to restructure the economic environment to try and achieve that target.
Yeah, at the moment, it's all chatter. They're talking about fiscal policies that are going to be I think the quote was quite large scale, is exactly what they were saying, but until we see exactly what that's going to look like, we're not going to know where that's ultimately going to land. I think for Australia, when you're talking about an economy that, to some degree relies on sending materials across to China in order to support their manufacturing, some of the concern with a Trump victory in the US is if they're going to be putting tariffs on China, if growth is going to be, slow and subdued in China, what does that mean for the materials sector within Australia? Still yet to be known, and there's obviously, a fair bit that's going to play out in regards to that. But some long-term consideration around the manufacturing or around the materials sector in Australia. Yeah, there might be a bit of concern around that.
That's an interesting one. Let's just play that out, right? So basically, Australia digs up stuff, sends it across to China. They then take that and build things with it.
There's a gross oversimplification, by the way.
And then export that stuff to America.
Yeah.
Donald Trump was mentioning that he's going to be putting 60% tariffs on imports. So if that's the case, the people that are exporting from China to the US are going to be paying that, or the end consumer, but someone will be paying that additional money. Therefore, you think, and the expectation is that demand will decrease. So they're not exporting as much, which means they don't need to import as much of the stuff that we're digging out of the ground to send to them. So basically, a Trump victory in that scenario is not great for the Australian economy from a mining industry perspective.
Yeah, exactly right. That's a very gross oversimplification, and I'm sure that a lot of economists are going to hate us for, how much we've oversimplified that. But nonetheless, that's ultimately, some of the concerns and how that might ultimately play out.
Yep. Okay. Well, speaking of Australia, Andrew, let's pivot to Australia, and what have we seen happen over here?
Yeah. So look, we're still looking at rises in the Australian market, not to the same degree as to what we were seeing in the States, but S&P 200 ASX 200 is up 0.25% for the month. Which is off the back of another positive month last month as well. So Australian market is still doing relatively well as well.
CPI.
Yeah.
CPI is a really interesting one as well too. So Q3 2024 rose 0.2% quarter on quarter, yet the year on year rate eased 100 basis points to 2.8. So what's really interesting about that, if we go back to the RBA's target range between 2 and 3%, we've snuck under that 3% one now. We're sitting at 2.8. And that's been the first time that it's been within the 2 to 3% inflation target band since the first quarter of 2021.
Which is interesting because Michelle Bullock's comment was talking about potential rate rises and the fact that we're, not through, whether that's just positioning the market.
The jawboning?
Yeah, exactly
potentially.
right. That, hey, we're not going to drop rates as soon as you think we are, and we don't want to, stimulate the economy with inflation and all of that stuff is yet to be seen. But it's interesting that this is the first time that CPI is within the target range since 2021. And so there's definitely growing pressure on interest rate reductions.
Yeah, I mean, look, we say that, but the Reserve Bank are basically saying we need to see it within the target band for a period of time to make sure that it just doesn't sort of fall under that 3% mark, and then all of a sudden we're there. They go and do something like cut rates, all of a sudden it's inflationary in nature and it goes back up again. So I get that. We're all hoping for that. There was talk about the Reserve Bank meeting in November and potentially that was the case. It seems to be getting pushed further and further back. So for those people with mortgages that were hoping for a cheaper interest rate, then that's not the case.
We're going to have
to wait a little bit longer.
Yeah, there were a few people, because it was on the Tuesday, there was a Melbourne Cup public holiday in Melbourne, so there were some people that were watching their phones for the horses, seeing if they won money, and there were some other people that were watching their phones to see if their mortgage expenses would decrease. So yeah, but unfortunately there was no relief, and rates stayed on hold. But I think the general discussion is that inflation is tracking in the right direction. So we are seeing inflation move within those target bands. It doesn't mean that just because, we've met that threshold that all of a sudden rates are going to come down and everything's going to be hunky-dory. But the fact that things are, moving in the direction that you want to be moving into is a positive thing.
Yeah, obviously it took longer than what we would have liked, and I'm sure there'll be some history lessons learnt out of the back of it, whether or not the Reserve Bank should have gone harder at the start just to try and basically really push it. But good news is we are in the target band, and in terms of what we're seeing, I think that will continue to drop a little bit more and stay within that band. So hopefully, fingers crossed, that does alleviate the concerns that the Reserve Bank have got, and we do start to see interest rate rises. Hopefully earlier interest rate declines earlier in the new year 2025. So that's what we're talking.
Yeah, exactly right. Retail sales was a pretty interesting one. Retail sales rose 0.1%. Expectation was that was going to be at 0.3%. So it's and if you're looking at from a long-term average, annual trend is about 5% in growth in retail sales. Yep. We're tracking at about half of that. So I think what that is showing is that the end consumer is feeling the cost of living pressure. They're feeling the mortgage expense, rental expense, all of that stuff. And generally one of the first industries, not first, but one of the major industries to get hit with that is retail sales. So even in lead up to Christmas spending and all of that stuff, expectation is that that's going to be very subdued in terms of what it was like in previous years. Which, truth be told, is exactly what the RBA is looking for. Yeah. But these are kind of the grass shoots that are coming out.
Yeah, and that's just unfortunately the way that it is. It's intended to slow the economy down.
Yeah.
Higher interest rates, and if that's any indication, it's working. Difficult if you're in retail. Hopefully, we start to see some of the Christmas stuff come through with the data, and obviously there's a big kick and a big injection there. But tracking below half that rate. I mean, if you think of a business and it's not exactly like this, but if you expect a business to do this in terms of sales, and it's that, it does become quite difficult to grow and run your business as well too. So
what you might ultimately see is potentially some issues with regards to, all of your Christmas casuals and all of your, employees in that sector. Anecdotally, and I don't have the data for it, but I've got a fair few clients that are in the motor industry, and that industry is very dead quiet at the moment as well. But naturally, as you'd expect, that would be the first thing that people would, delay spending money unless they absolutely have to. If you're running a tight ship in terms of your budget, the first thing that you're going to do is not buy a new car, because it's a pretty significant expense. But what this is all culminating in is high cost of living environment. People are feeling the pinch, and so people are reducing their expenditure in order to be able to cover their household budgets, which is exactly what the markets or the RBA has wanted to happen.
So it sounds like, Andrew, we're living in the wrong country. Maybe we should be living in the US.
It'd be nice if you could just move, get a bump in one economy and then, move back when things change and be able to go between it.
Nice. Andrew, I reckon that does the episode justice. I reckon we covered short, sharp as usual for the market wraps.
Yeah, absolutely. So, Bills, thanks again for another episode. Thanks to all of our listeners and our viewers, and we look forward to catching you on the next podcast.
Thanks.
Thanks for listening today. If you have any questions on what we talked about or would like to have a chat about your money journey, visit us at 360fs.com.au.
Just a reminder to our listeners that the information contained in this podcast is general in nature and it is not intended as personal recommendations for the audience. Please consider whether the information suits your circumstances before acting on it. This information is provided by Billy Amaritis and Andrew Nicolaou of 360 Financial Strategists Proprietary Limited, authorised representatives and credit representatives of AMP Financial Planning.